Good morning, this is John Piper with the weekend video clip, and it's Saturday the 12th of September. We'll start with China as usual. Not a great deal has changed in fact since my report on Thursday morning. I appreciate that only subscribers would have got that, but we were looking at corrective rallies, and we're still seeing corrective rallies, so not a huge amount has changed, as I said. On China we got the wave 1, got the wave 2, we then got a 1, 2, 3 and now a 4, with a fifth wave now due. Looking at the shorter term price action, this is a daily chart. We'll just go down left. Okay, here is the corrective rally with an A wave, a B wave, and I think the way to count this now is a 1, 2, then a 1, 2, 3, 4, 5. That then becomes this thing here, which is pretty dithery, becomes a fourth wave with a fifth wave due. Next week we have expiries, and expiry is a critical time for markets, as you know. So I can see us dithering up a little bit into expiry, and then the market turning next week or the week after, and seeing the next leg down, which would be a fifth wave. So my target there is still 2226. That's the minimum target, and I'm expecting new lows on China, and very possibly other markets as well. We'll look at that in a minute, obviously, but I'll be looking to go short next week or Monday, depending on the patterns that we see. China being a difficult market to trade because of the hours, that's a personal choice, but I'm looking for a peak and more downside. But I want to run through these various corrective moves we're seeing and what would be needed to change the picture here. This is the Dow, A, B, C, B wave, and then an A, B, C, C wave, with resistance around this sort of level here, a bit below there obviously. This could be the start of the new decline here. Let me go down a leg actually. Alright, this is a 15-minute chart. We can see that there's a pretty impulsive move down to there, followed by a rather dithery sort of diamond shaped type thing, which is still continuing. We haven't got any. That may not be. Well, we don't know it's over yet. We got next week. Looks like a bit of upside in China possibly. So we could even see a retest of the highs up here. I think possible. Might go a little bit higher, but we need to see solid acceptance above that level, above 16,700, to change the bearish implications of the current pattern. Again, I think the end of next week, beginning of the week after, will be key times for this market. Okay, here's the DAX, the daily chart, similar pattern really. A, B, C, ABC regular, wave 2, followed by a 1, 2, 3, and this corrective fourth wave seems to be coming in. Again, we may have seen the peak. Let's go down a leg. So again, a fairly clear pattern. A, B, ABC, C, B wave, A, B, C. Then a fairly impulsive move down here, fairly dithery at the moment. Again, a bit more upside next week maybe. Then that's the key level right now, 10,500 thereabouts. Solid acceptance above there would change the bear case. So unless we see that in the next couple of weeks, I'd be looking for us to retest the lows. Although on China, new lows look quite likely. I think it's not quite so clear cut on the DAX or indeed on the Dow. Right, the daily chart of FTSE, 1, 2, 1, 2, 3. Again, looks like a corrective fourth wave. Same pattern, same indications. Certainly a retest of the lows and very possibly a break of the lows coming in probably after expiry, unless we see this level here taken out, which is around 6,300 or thereabouts. Alright, gold is testing to the limit. We've got this possible 5-wave advance here. 1, 2, 3, and then a little blip up 5, followed by an A, B, C. Currently we have the two legs, the A leg and the C leg, roughly equivalent. 1170 down to 1120 is minus 50. 1150 down to 1100, sorry, is minus 50. So they're pretty much the same length. It's blip below 1100. It could blip again. Rather similar. I think solid acceptance, as I said before, between 1095 and 1100 would suggest this actually is a new impulsive decline. Going to take out the lows. It may well set the scene for a good buying opportunity, but obviously one doesn't want to be caught by such moves. other than for investment purposes. Whatever, traders don't get caught by that kind of stuff. Investors are happy to carry on. As I'm an investor in gold as well as a trader, it's applicable. So I bought gold coins, for example. I'm buying more gold coins if we go lower. So that really covers gold, I think. All right, finally the euro dollar. Basically, we're seeing this big decline, followed by the ABC, A, B, C, A wave, A, B, C, B wave. It looks like there's a good chance that actually is the complete C wave. It may not be, a little bit short in terms of time. This correction has been going on now since March, so it's quite long in the 6 months. But that is the peak. Let's just have a look at that in a bit more detail. This is the 2-hour IG chart, and we've got, let me get rid of that thing in the way. Okay, so we've got a 1, 2, 3, 4, 5, followed by a pretty corrective move up to there. The 50% retracement level is around 11.4. It's about a 600 point decline down from 11.7 down to 11.1. So could see a move there. Looks like an obvious shorting opportunity coming up here. We've got the clear impulsive decline, followed by the fairly feeble rally. In fact, we've already got 5 waves. 1, 2, 3, 4, 5. So any kind of reversal around here. There's nothing going on with gold and the equity markets, but that's certainly worth watching. Okay, hope you found that interesting and useful. We'll be back with the reports on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.